Hello, everyone. Good day. And right now, we're going to answer some questions about cash and cash equivalents. But before we answer these questions, I want to give some credit to our Professor Patricia Robles and Anytime Playo because we're going to use their um, book or handbook this time entitled Intermediate Accounting Volume 1, um, Edition 2019. So let's start. It is the multiple choice in chapter 2, cash and cash equivalents. So multiple choice number 1, which of the following characterize a financial instrument? So letter A, it results to a financial asset for one party and financial liability or equity for another, can be. Letter B, it must be payable at a later date. No, it must be signed by the issuer and countersigned by the holder. No, and letter D, it must have a maturity date, which is also no. So our answer here is letter A. Multiple choice number 2, which of the following items shall be presented as part of an entity's cash balance? Number 1 is foreign currency deposits, which is included. Number 2, undeposited customer checks, which is also included. Number 3, bank deposit segregated for acquisition of equipment, which is not included because I think it is for bond sinking fund, which is restricted. And number 4, bank deposit segregated for payments of salary. Excuse me for this one. For salaries, that is included. Number 5, cash fund for payment of small expenditures or the petty cash fund included. And number 6, IOUs from employees, which is not included because this is a receivables. So our answer is 1, 2, 4, and 5, which is letter A. We will put this here. Next is number 3. Which of the following is considered cash? Letter A, 30-day certificate of deposit, which is not included, not considered as cash because this is cash and cash equivalents. Letter B, customers post-dated checks. I think this is a, what do you call this? A receivable. Letter C, money market checking accounts, which is considered as cash. And D, 6-month money market savings certificates. It is 6 months, so it is not considered as cash. So our answer here is letter C. Number 4, which of the following may qualify to be reported as cash equivalents at December 31, 2019? So number 1, I'm going to read this first before we answer. Number 1 is redeemable preference shares purchased 3 months before the redemption date. So 3 months before the redemption date, it is considered as cash equivalent. So 1. Number 2, 6-month treasury note purchased on November 2, 2019 and maturing January 31. So disregard this 6 month. Just focus on this date of purchase, which is November 2 and maturing at January 31. So if it's inside the 3 months, it is considered cash equivalent. So November, December, and January 31. It is still inside the 3 months. So it is still a cash equivalent. So number 1 and 2 is included. Number 3, 3-month certificate of deposit maturing on February 14, 2019. It is said that 3-month, okay, that is included. Number 4, ordinary shares of other entities held for trading purposes and expected to be sold 3 months from the date of acquisition. I think preference shares are only included here, so it is not included. Number 5, check of a customer received. Yeah, I think this 4 is an equity, so it is not included in the cash equivalents. Number 4, check of cost of a customer received in December and dated January 10, 2019. The check cleared the bank in January. This is a receivable, so the only qualified to report as cash equivalents is 1, 2, 3, which is letter D. And lastly, for number 5, Which of the following are considered cash for financial reporting purposes? Number one, petty cash funds and change funds, which is yes, considered as cash. Number two, money orders, traveler checks, and personal checks, yes, considered. Number three, coin, currency, and available funds for current operations, considered. Number four, postdated checks and IOUs are receivable, so they are not included. Savings account for employees, travel included. Savings account for acquisition of equipment, which is bond sinking fund, not included. And number seven, savings account for acquisition of inventories. Inventories are current, so it is included. So included are 1, 2, 3, 5, and 7, which is letter D. Okay, before we proceed, that concludes, that concludes our presentation today. And see you next time on number 6 to 10. See you on our next videos. Thank you. Goodbye.